Hello, everybody. Can you hear us? Welcome.
I can hear you, Thomas.
Same here.
If that counts for something.
Super. Thank you, Maya. So Maya can hear us as well. Hello, Mike. Welcome, guys. Thanks very much for joining our webinar. We're gonna start very soon. Maybe we will a couple of minutes for the latecomers, those that are being fashionably late, and then we will go straight to it and open the floor for this very interesting topic, right? So let's wait one more minute and then we will begin. A bit of housekeeping, by the way, in case you would have any question throughout the webinar, please feel free to write them down, and then when we pause or when we have a little bit of time, I will read them out to participants. And if you have specific question to specific participant, then please state the name who you're actually asking and about what, and then we will obviously refer to this with the answer. The webinar is being recorded and we will be sharing it also through our social media channels, through LinkedIn and through YouTube. And I'm sure Anne-Marie with Tacticon will be sharing that as well in the future. So, as it's already 6:02 in Estonia, I think it's good to start. So again, welcome everybody. Thank you for joining us. We will be talking today about very interesting topic, and the topic of our webinar is forecast versus reality, right? And kind of very typical revenue management / hotel management topic, and how we can adapt our strategies to ever so unpredictable markets, and especially the one upcoming in 2026. We have with us two great experts that will be sharing their point of view with us. Expert number one is Anne-Marie Gubański from Tacticon. If you can say a couple of words to introduce yourself, Anne-Marie.
Yeah. Oh, thank you. Well, I have my Polish last name, but that comes from my Swedish husband. I'm Dutch myself, and I've been working with revenue management for about 25 years. And 15 years ago, I think I started and founded Tacticon, which is like a revenue management, marketing and sales oriented consultancy.
Thank you very much. Or more. You can say more, it's okay. Juan?
Oh, if you want me to say more, I can tell you my intake on forecasting.
We will get there.
Good.
From BNX.
Yes, so good afternoon, everyone. Thank you so much for attending. I'm looking forward to this conversation. Myself, as Anne-Marie, I'm also a revenue management consultant. I'm collaborating with BionX, and I have already 20 years of experience in revenue management, and the last decade has been dedicated to implementation of revenue management technology across the world. So, this topic we are going to be talking today is definitely one of my favorites.
Amazing. Thank you very much. Welcome. It's great to have you both. So we've got great experts and a great topic, and we've got a few different areas we'd like to cover. But before we go to the main kind of subtopics, I would actually like to ask an amuse-bouche question for both of you. Why do hotels even need forecasting? Why? What's the point of that? Anne-Marie, what's your take on that?
Well, I don't know how they can do without. Actually, for us, forecasting is the base of all our strategies, and every day has its own strategies. But I feel that sometimes for many hotels, it's more like a reporting exercise. Somebody from head office wants to have a forecast, and that it's actually like more of a prediction tool. And for me, I think forecasting is a decision tool. It's a strategic tool. But for us, forecast is also something that we would like to dedicate to some kind of a budget, some kind of a goal, because with the forecast we can also see, are we going to reach our goal? So I can give you an example. If we say that in our budget, if we see that we can take market share in certain ways, like we need the revenue, and we see that, okay, we need, I don't know, 80% of occupancy, we can already in our forecast just like say, okay, we need to have this 40% of this occupancy, I don't know, 4 months in advance. It depends very much on the hotel that we work with. Which means that for us, forecasting is not only like a tool that we just like do for reporting, but it's also very much a tool that we can use. Are we going to reach our goals? So it's very much forward-looking looking tool for us. And that means that we can just like be very proactive. We can already from very much in the start say like, okay, we know that we see that we have some issues in certain periods. What are we going to do about that? And that for us is actually the main goal of a forecast.
Okay, thank you very much. Interesting. Juan, what's your take on that?
Yeah, no, I completely agree with Anne-Marie. Actually, forecasting is one of my favorite tasks, and I believe as well that it's fundamentally important, not only from a reporting or analytical point of view, but as a strategic exercise, as very well Anne-Marie was describing. However, because of my role, I get to talk to many hoteliers around the world on a daily basis, and I see many different type of scenarios out there. I still find companies where forecasting is not part of their business routine. I find also some hotel companies where forecast is done, but at a very high level, more of a compliance exercise. Some still work with budget as their main goal or target without really reviewing it kind of consistently over time. So different flavors of how really forecast is used or not used. But in my opinion, if we don't do this exercise, is a missed opportunity. Is forecasting treated just as a compliance ritual is a missed opportunity. Is also an opportunity for using this task traditionally kind of limited to the revenue management function. It can be turned into a business planning tool, really going beyond the revenue management function. Areas like staffing for operations, purchasing, sustainability, F&B could actually benefit from that forecast as well. And yes, once we take the forecast exercise and we make a regular practice and we take it away from the revenue management function exclusively, it can be a really great tool. Just not only about strategy, but looking into how we can reduce costs and things like that. So I agree with Anne-Marie. I don't know how hotels could do without the forecast, and it's really a great exercise that I recommend to everybody to implement and to execute on a very regular basis.
I think, Juan, you make a very valid point. I mean, I've seen the difference of the past 25 years now. It is very much of a tool where you say what you say. That's very important for the whole of the hotel, and I feel also that hotels are using it more and more and more for planning. So yeah, I think you're completely right.
Yeah, there is great potential there, right?
Yeah.
For us as revenue managers, obviously, it's a tool that we need, that we use in order to prompt proactivity, as you very well mentioned before. It's a great guideline that we can use to really go beyond, go into other areas of the business. Yeah. 100%.
It's interesting that you both mentioned and you both have experience with it, that not all hotels or hotel companies engage with a proactive and strategic forecasting. but I bet everybody is before they go to the beach is checking the weather forecast for tomorrow, right? To make sure that you can plan accordingly. And it's always funny to kind of compare it to what you do in the real life and at work, when that's really important. That's great. Thanks very much for this. So the conversations nowadays, obviously we are in the area where we're seeing, or we're witnessing for the past few years, the so-called AI revolution, right? And AI, machine learning algorithms and different platforms have really changed the way we look at future data prediction and future event predictions, where the machine learning models, the deep learning models, are expected now to generate much more accurate predictions, whether of a demand or the revenue incurred, or whatever you call it. But is that something we can fully rely on? So the way we look at this, is it going to be in 2026 AI driven forecast, or is it going to be human driven market sensing? And how us as a hoteliers can bring them both together, and actually, as we talk about unpredictability, navigate through that unpredictability and those forecast changes kind of every day. What's your take on that? Is it technology or is it human that will lead that in 2026?
Yeah, you're asking a human to speak at a technology company's webinar. So, but
that is the point, right?
yeah, no, but I think it's going to be both. But I mean, AI is fantastic because good forecasting is tedious work if you want to do it. It's like without any help. So AI, actually, we love the fact that it helps us make better forecasts, but also it helps us to make faster forecasts. But AI is also, it's fantastic at detecting patterns and anomalies in real life, but it's the humans that recognize the meaning. So if you have like the machine that can quickly see if a pattern is in a certain way and are there anomalies, it's the human that understands why it is. So if technology sees, or if AI sees that a pace is going much quicker than normal, it's the human that knows, well, okay, it's because there's an event going on. So it cannot predict any signals that humans are giving. And that is actually quite difficult. I don't know how that is going to evolve, actually. I mean, AI has evolved very quickly, but is it ever going to sense feelings? Some people say they do. From my point of view, by the way, also what is very interesting, my dear brothers are both in computer science. And they just like say, well, okay, your job is just like, it's not going to be existing because AI can do it much better than what you can do. And I agree, but then AI is not human. And the human touch, I think, is going to be quite necessary for quite some time.
I'll take it from there, actually, Marie. I think it's technology with a human touch or two, for sure. I think it's very important, going back to the previous question, that we walk before we can run, meaning we need to have a forecasting routine in place, and we need to understand and what we are going to be using, what we are going to be utilizing that forecast for. But once that routine is in place in the business, I think technology, in this case AI, is going to really help us or is already helping us, because what is allowing us to do is forecasting at a scale. We are basically reviewing all these different data sources that are feeding the model for any date into the future, 1 year window or more, several times a day. And if you are a revenue manager looking after multiple properties, I can guarantee to you that you don't have the time to do this at the speed and the window that AI-led forecasting models are able to do. So what we are looking for here is scaling what we are doing today. And rather than doing this exercise of forecasting on a regular basis, on a weekly basis, you could have a really fully up-to-date forecast, factoring in all these elements. And as very well Marie was saying before, having a tool to really recognize all these patterns. And then the time that we are dedicating today to forecast, which is actually, I love this art of trying to predict the future and see what the future is going to bring to us. But rather than dedicating the time to kind of figuring that out, which is laborious, which is difficult, and sometimes as humans we do it a bit biased by budgets, by targets, by pressures, by past experience, you want to have this sort of unbiased tool, really looking at the data in a cold way and producing that output for you. And then you can add that judgment. What am I using this forecast for? What sort of patterns here are the system, the model spotting for me? And there is where you can actually interpret that data, put it into context, with geopolitical events or a promotion that you might be running or whatever might be going on in your property. You have the full picture, and how you interpret that data and how you put it into action in terms of a strategy, that judgment that we were talking about, I think is key, and is the added value that we as industry professionals we can bring and utilize technology, what is there for, enhancing all this proactivity that is required, but also bringing our knowledge, our experience, our strategy, our business needs, which I think are, as I said, is kind of where revenue management should be heading into, right? Rather than some of the repetitive tasks that we've been doing over the last few years.
I can give an example maybe also. Usually when we come into hotels, and we have hotels all over Europe, and well, when we go in with our outsourcing services, what we very often find is that there has not been a forecast. Even some hotels that say that they are working with it. So we recently started with one, and they had a lot of pricing strategies, but then when we looked at September, which they just like forecasted at that moment as their main month, we look at their results and it's like, well, it's about as good as any other month. And why is that? It's because they started the forecast just like after the demand was there. So they had their biggest customer was just like they'd been booking up all their hot days, you can say. And the biggest customer, yeah, well, okay, they had a very low rate. If they would have done a forecast, if they would have been proactive, I think they would have just like acted differently, because they would have dared to say no to certain types of business and make more money. So I think it's the forecast. I mean, it's, as said, I don't know how to do without.
I actually see this a lot in hotels that have not been proactively forecasting, or perhaps they never used a revenue management system before, where their strategies are very much focused on the books and pickups and things like that, which of course are an important point of reference. But very rarely they actually look at forecasts. It's like, even if I have 0% on the books, how is this period expected to behave from now until that day, right? And based on that expectation, you start setting up your strategy. I know that can be a bit nerve-wracking, right? When you want to have kind of on the books business in order to take decisions, but that's kind of the beauty of the forecast and what is going to end up bringing incremental revenues to your property.
Yeah, but I think also it's very important that the point that you made, a forecast is good. You understand your future demands, but it's nothing without a strategy. It's just, otherwise it's just, well, it's a reporting tool, as we come back to. So it's very important that it's not, it doesn't only sit at, okay, I do forecasts and I'm very good. It's like I do a forecast because then I know what to do with it. Then I know how to optimize my property the best way.
Okay, so let's put a twist there, right? So I think let's go back to a very typical hotel and the way they kind of do go about the business, right? So there's a budget preparation at some point, preceding the year that we're actually budgeting for, right? Most of the companies will probably be done with the budgets, and the bigger companies, they would have that budget done more in advance. So we have the budget, so we have that first original forecast that is 90% political and 10% realistic, right? So we have that. Would you say now, what is the next step? Are we building our strategy around it, right? And then rigorously keep to that strategy to achieve that business? Or do we actually use forecast as a tool to allow us a bit more adaptability to that budget? And actually, instead of building a kind of fixed strategy, like the traditional fixed strategy, we more go after flexibility first, scenario-based planning, right? Like, so we are adaptable. And where actually the machines come in that equation, which is typically human, and where there's a human factor that really prevails.
Could I take this one?
Yeah.
Yeah. So I think in the current market scenarios we are facing, agility wins, right? So the conversation, and Anne-Marie actually made a point on this, in terms of if we use forecast, we've been very much stuck on the forecast accuracy conversation. But I think what the forecast actually gives you is this capacity to benchmark all the time these expectations versus the realities that the market is presenting to us, to you. And at the end of the day, what is giving you is this capacity to adapt, shift to these ever-changing market conditions. And we are able to produce a forecast, and this forecast variance is very little over time. Good. That means that you are in a very predictable market and things are going to be slightly less stressful. But what we need to gain is this capacity to adapt. And with profit margins being squeezed because of increased costs, because of the lack of capacity to continue increasing rates as we have done in recent years and things like that. This agility to also trial and error things and see what is working and what is not working, and how you can squeeze a bit more profit on every single decision that you are doing. Having that forecast again as a point of reference is really, really important. So at the end of the day, what we are looking for, we touch on it, is proactivity rather than reactive revenue management that can actually deliver the results that are expected from us. This, I think, anticipation is crucially important.
Yeah, I agree with you. I mean, you should work with scenarios, not have just like a single plan, and just like be able to adapt to the market, because it's changing fast. But I'm quite old-fashioned. I like to have a budget. I like to have some kind of a goal. And the way we usually try to do that is to see, like, okay, we use the benchmarking reports that we have and see how can we just like gain market share. Because if you work like that, you start also to be able to adapt your forecast and adapt your strategies towards like some kind of a goal that that you have to reach, and you are able to reach because you've been doing that according to what the markets has predicted us. But it's very important that we don't really not just like stick to a plan. Now we have a budget and it comes from this and that market segment, and okay, well, it didn't happen. Well, sorry for us, we did not make the full potential. We really, really, really need to work with it very, very actively. I agree.
The thing is, even when you have a AI model helping you with the forecast, right? You have that advantage. Even if you disagree with the forecast, it's actually good to understand why the system is giving you a certain level of expectations. Why? Because the model is unbiased. It's taking raw data from different sources, looking at your hotel, looking at your market, looking at the destination, and giving you an output. You might disagree with it, but actually that should be prompting you also to proactively review and understand what might be going on. It might be that the model is missing a piece of information, or maybe you are not really interpreting it. But as having that conversation particularly when you have that advantage that you have this AI generated forecast, having that conversation and questioning all the time the system expectations versus your expectations and calibrating. Probably there is a balance in between. I think it's a great tool. We shouldn't take these AI models as gospel, right? That we sort of follow blindly. It's a tool. It's a tool. The thing is, the tool is generated constantly and is giving you this sort of a bandwidth in which you can operate and run all these scenarios, testing things, but with control, of course, which, as we know in revenue management, is very important. For example, I always give this example when I used to do revenue management in London. I used to work with this city center hotel, and in order to fill kind of shoulder nights, shoulder periods, the hotel was really over-contracted in corporate business. So when I walked into my peak weeks, even when I had very little on the books, I was already proactively managing corporates and restricting them. I just didn't want to have the situation where all my floodgates were open and all of a sudden I started to get low-rated business that I will regret later on. That level of braveness is required, but that plan never sometimes didn't go according to plan. So you will have to actually calibrate and open floodgates and close them and open them partially and make sure that at the end of the day you were delivering the best results possible. And that's what these type of tools are going to give you, and the type of tools that we have available that we didn't have in the past. And I think they are very very beneficial and very helpful.
I'm laughing to Juan for in that time also, just like you had this battle with sales versus revenue. Your revenue was just like trying to push out on certain markets, and sales then saying, yeah, but this is a long-term contract. They also give you business on other days. And I think we've come a long way since that as well, because I think that we have the tools to show that how important they are. But I'm also thinking about something.
Justify your decisions, right? It's helping you with that, exactly, to bring a conversation together.
But how do you ensure? Because I mean, I understand that you need to really be able to rely on the forecast which is given to you. Do you that? But then how do you ensure this? I mean, what do you do when you start seeing like, okay, maybe for this particular hotel it does not work as well as for another hotel, because every hotel has its different things.
So maybe I throw for both of you a little bit of the, right? Because I think scenario, this is exactly where we kind of go as experts in the field. You know, we have our budget, and we have our long-term forecast. Let's call it the first forecast we do in a year. And let's assume that this forecast has been generated by machine. Some sophisticated platform like Bionex created you a forecast that is significantly, for example, in November, we're now in December 2025, we're looking at November 2026, and our machine is looking at the forecast that is significantly below our budget expectation, right? So we have this, let's say, accurate forecast, which today really is far beyond from what we want to achieve that year, right? So from perspective of the scenario, you know, what do you do as a consulting company? Do you go to the hotel owner and say, hey, your November is going to be bad, so brace yourself? Or how do you approach that? How do you work with that forecast?
Yeah, well, there's two things. First of all, it's like if the results aren't as good as what you wanted to have, it's always the revenue manager which is to blame for some reason. But no, we just tell them. I mean, this is part of our role. November is not going to be good. We already see that now, so we need to take action. And action is not only a revenue management kind of thing. So where does an extended demand come from? Well, it's our marketing and sales strategies in which we can just like handle the demand that comes in. But we need to, at a very early stage, already say like, okay, you budgeted November, you said as an example, right?
November.
You think it was good, but it can be good, then we need to do something now. Because if we don't do that, we just don't, well, we don't do right for our customers, I believe. But yeah, you have to be honest, and that means also sometimes, well, we're never politically correct, but you have to be politically incorrect. You have to just like say it, because otherwise it's not going to go well.
So from perspective,
the scenario you gave for likely in a year's time, right? So we have time to work on it. Sometimes we need to react more short term, but I think that's something we've been demanding from the revenue management function for years, this capacity to communicate and then pull the levers that you have available and orchestrate a plan to close that gap, right? That you very well described in your question. So that communication, clarity, and direction, right, as to what levers we need to pull in order to shorten that or reduce that gap or overcome that challenge, I think is important, and it's something that the modern or the contemporary, let's say, revenue management role requires 100%.
So I have a good challenge, because we've talked about this in industry for some time, right? And that the topic was always forecast accuracy. Revenue manager was challenged on forecast accuracy. It started with 30 days. Then the revenue managers were meant to be super accurate 90 days in advance. And everybody kind of looks at this, oh, you need to be 3% accurate maximum. That's your kind of margin of error. But in reality, is that the best utilization of the forecast as a tool, right? Because surely trying to meet the forecast prediction to be accurate might in many ways might be counterproductive for your business. So maybe we start with Juan. How would we approach it from the technology perspective?
Yeah, I have actually been incentivized on forecast accuracy, and I was very proud of my results. But sometimes, that could be a bit counterproductive, right? Because you could control really certain things in order to achieve the forecast and prove yourself right. Things have moved on, and this capacity to adapt, I think, is super, super important. So what we are looking for today is adaptability of the forecast. The markets nowadays are changing all the time. So again, we require forecasts at this level to be able to understand and calibrate what market is presenting to us at any given time. And then to add one more element to the conversation, granularity. We have been forecasting traditionally hotel level. If you had time and the tools, you could go down to the segment level. But today, as the conversation is moving to profit, understanding how customers are behaving, super important, obviously, but understanding where they're expected to book from, how much that is going to represent in terms of cost of acquisition, really, really important. And more also inventory. Forecasting how the performance of the different room types, when you have enough inventory, of course, is going to be.
Yeah, we think we lost one a little bit.
Oh, is it him or is it me? No, it's him. Okay.
It's Juan.
Did you shut him up? That wasn't nice. Yeah.
But as Juan is frozen, maybe we go, Anne-Marie, to you, and you can give us your take on forecast accuracy.
Yeah, I agree with Juan. We are the ones we are the ones handling the forecast, the demand. So yeah, to have a revenue manager being solely judged on forecast accuracy, I mean, it's a bit that's not really good. But Juan, you're back.
Yeah, sorry, I thought the webinar had finished for some reason. So sorry, probably was my internet. That was the point I would make, that forecast accuracy is something from us. The needs requiring this adaptability and you can continue.
No, I completely agree with you. But then there's two ways, right? I mean, the focus has to be quite accurate as well, because you're building your strategies upon it. But I like a forecast to be as accurate as possible on the long run, because then it can also signal us that we need to do something. But no, it's the adaptability of your strategies that actually is much more important than if the forecast is 3% correct or not.
But I think if I was to put those 2 points together, I think this is where we've been discussing this, and every single event I've been to in the past 2 years had this last question: is AI going to replace job in hospitality or revenue manager or whatever? I mean, the common understanding is, well, technology is replacing jobs in general around us. But I think here you put a very good perspective on this, right? You might have the most accurate forecast ever. But if that forecast is just accurate forecast, that means there is no managing that unpredictability, right? So we predicted we're going to do bad. And here comes the human interaction, the drivers, the revenue leaders, the sales leader, the marketing leaders, the commercial leaders that say, okay, perhaps under current state of things, we're not looking so great, but we've got X amount of times to change it. And this is then down to people to focus on that strategy and execution in order to, as Juan said, adaptability of the forecast to move that needle. Where, back in the day, as we talk about accuracy, I remember same conversation. I had to be accurate. So if I was inaccurate, that was whether up or not, that was not good. You're not being accurate. So the forecast was very political, and it was, you didn't really put your expectation and reality. You would kind of put where you forecast to finish, which didn't really highlight the opportunities or the risk the business had, right? And nowadays, I think as we get into update, we can more see how this combination of automations and really sophisticated algorithm really needs to stick together with the right people, because those are the people that will make sure that November pool forecast, when we look at it in October next year, is actually going to be ahead of the budget, right? And that's not because it was inaccurate. It was accurate at that time, but with the actions and activities and being robust and being flexible and working towards this scenario planning, the hotel commercial team actually managed to counteract it. So I think this is where we're coming really to that point, how to adapt your strategy to unpredictable market conditions, right? We see how it evolves. That the tool of forecast is only a very small part of the equation here. And if you really want to build a solid commercial strategy, you actually have to combine a bit of both or a lot of both in order to make it work. I would actually like to hear from you an actual example or a case study where that has happened in the past, where you have identified or the need and you actually work around to make sure that the outcome was different, and maybe something as of a best practice for our listeners today as well, how they can approach it in their own businesses, because they will also looking at forecasts that doesn't really match the budget very often. The budgets are very inflated nowadays. As Juan said, profitability is the key, and we can only grow rates to a certain degree, right? But if you want to meet that NOI targets, then usually we tend to inflate the top line because it's easier to control than the bottom line, right? Or at least we anticipate that. So how do you guys come around that? Both in your consultative roles, let's say, both Juan and Anne-Marie. Give us some example.
I always am very bad at giving examples, but then no, I think the first example I come from is but that was just like a company that was just like very much into heavily relying on the budget, and if that budget wasn't really good, I could not just like forecast it already from the start. A little bit what you, where I think what you were into, Thomas, because that was politically incorrect. I wasn't consulting there. So yeah, what did I do? I prognosed quite close to the budget. And was I very accurate? No, I wasn't. But I can also say, I think for that company, it was really a paper exercise. And I think if we want to take something with us from accuracy or from forecasting or anything, I think we should see it as something that is like a very, very, very strategic kind of document. Was that an example?
Yeah, actually, it was a good example. Juan, maybe you can give us some examples of the hotels you've been
So
working.
when I two areas where I think proactivity could be in enhanced and forecast used for that is normally when I go to a hotel and then I pull, now we are at the end of the year, is pull how many days have you filled the property, and those that you didn't, how many you ended up with 95 to 100% occupancy. And when you run an analysis, actually you can very easily quantify if you have had more courageous, let's say, overbooking strategy or things like that, how many more rooms you could have sold on days where you had high compression, and therefore you could have sold those rooms normally at a quite high rate. By having forecasts, that will give you that, or taking into consideration cancellation patterns, no shows, and so on, that could give you that confidence to sell those extra rooms and do this control overbooking, and that has the direct impact on the hotel bottom line. And another area which you can tackle really quite no, I was going to say easily, but it's not easily, but normally it's quite easy to spot that this proactivity is not being implemented is with groups. There is this tendency, because that kind of sometimes, because of the volume, goes a little bit beyond the pure revenue management function, and groups tend to be quoted and take them as they come along, without really questioning ourselves. Is this a group that I want? If I want it, what sort of contribution I should be getting from that group? What do we want to achieve with it? What rate should we quote? And again, if you have that visibility into the future, you kind of can play with that group strategically and make sure that you convert it, or you don't. You wait for the next inquiry or for the next patiently. And again, using that North Star that the forecast is giving you, and tackling, this type of projects, you have a direct impact on your hotel revenues and profit.
Juan, I'm so glad you say this, because what we see a lot of times is the sales department, the group department, they don't know anything about revenue management, and they usually are not a part of a revenue management function, because they sit on the sales. But they are vital to us. They can be make or break if they have accepted a group which is too large or too small or not profitable or whatever. It can just not only damage that day, but the day before and the day after as well. And this is actually the department that we really want to have a very, very, very good relationship with. But in all honesty, it's very often actually a sales department, and it's not the revenue managers that are there. We usually say that this is a revenue management light function. If you want to know about revenue management, start there, because if you can tackle that, you can tackle a lot.
Is going back to the very beginning of the conversation. If you make forecasts more than just a revenue management activity, and you actually share that information with a purpose to all the departments, groups, sales being one of them, the impact can be massive. And this is just one more example of many that we could discuss.
But I think this is where we exactly very nicely went there, right? I think, coming back to the main topic, how to adapt to this unpredictable market conditions, perhaps I think as a first step, we should all look back in our businesses and see how that forecast exercise, that is mainly an exercise in majority of the hotels, how that actually adds value. Do we communicate it clearly to all the stakeholders? And especially, as you, Anne-Marie, said, it's sales, as our sales team aligned with what we're seeing in the market? Is our marketing strategy aligned with what we want to achieve? Coming back to Juan, to your point of making sure that we understand where our business is coming from, how expensive it's going to be, right? Are we able to move that, right? If we see that most of our demand comes from booking.com or Expedia or any other OTA, and it has high cost of acquisition, are we able to allocate fund to move that needle and try to book those guests into our direct traffic? but those are the questions that typically revenue manager would ask himself or commercial director would ask himself. So perhaps as a start, in order to navigate through uncertainty, we should actually start with removing the barriers, do the forecast by people with the machine learning AI algorithm for scalability, for quality, for speed, for adaptability, and actually make it with a purpose, to spread across the business, to optimize all the disciplines. I mean, I think, Anne-Marie, you started it at the very beginning. Why do we need forecasts? Well, how do we know how many people need to come to serve breakfast? Typically what happens is we take a PMS report 2 days before and say, are we going to have 150 people? And we make rota, or we used to at least make rota 1 week ahead or 2 weeks ahead. And then, hoteliers will be like, oh, how come, we have such a high turnover in F&B departments? We give them 2 weeks notice when they need to work, right? And those times are long gone. And we can actually plan very well ahead nowadays, our teams. And obviously it can be adjustable and adaptable, but we need to start somehow, right? So I think what we got to the very nice point of it is that the need of using this as a purposeful exercise is what's going to really make a difference in 2026. Wouldn't you agree?
Yeah, I do. I think coming back to what you use it for, it's a strategy. Sorry, Juan.
I was going to say, completely agree.
Yeah.
Very important.
Okay, so we're reaching an end of our webinar, 45 minutes. So I would like to ask an audience if there are any questions, comments from the audience to any of our experts. Then we can wait a couple of minutes. I be very honest, I found this conversation very inspiring, very interesting. I hope our participants also could learn something. I really, having worked in different hotels at different levels, in different kind of verticals of the hotels, I can honestly say that forecast was always underutilized and undervalued. And if it became, and it used to become very often, a tick box exercise or a exercise, politicized exercise to show to GM, owner, investor, or whatever, that always ended up causing us performance, right? Because we tends to be influenced, like Juan said, that the beauty of this AI algorithms is they're not influenced by people, and they will tell us the ugly truth. And what Anne-Marie then topped on is that ugly truth that we can still action and navigate through as people and drive that business forward. I think this is where the great combination is. And I think we should really, if you're not already doing it in your business, you should really look at how the forecast is done and what is used for, and see if that is the impact you need, because the application of forecasting exercise is it should be a base for everything we do in hospitality, essentially. Any parting words?
No, from me, just thanking you, Thomas, for the space, and Marie for the conversation. It's been great. And if anybody has any questions or follow-up questions, by all means, they can reach out to us directly, or LinkedIn, where we are quite active as well. Thank you, everyone.
No, thank you so much for inviting me. It was really, really, really nice to get to pick your brains on forecasting. Thank you.
Thank you, Juan. Thank you, Anne-Marie, for joining. It was absolute pleasure to listening to you guys. You're a true expert in hospitality. And yes, guys, if you need to pick anybody's brain, those are the people to reach out to, because they can definitely help you navigate through uncertainty. Thank you very much. Have a fantastic evening, and hope to speak to all of you very soon.